the best performing stock in the Nifty for the last 21 years. Now, this is something that one may not expect of what we would call a diversified federation of companies. But Mahindra is really the India story. We operate in 70% of industries that make up India's growth over the next decade. And what we are seeing is all our businesses are starting to really fire on all the cylinders. We started with discipline and capital allocation. As soon as we had a good handle on that, we pivoted to growth. And what we are seeing is mega growth across many of our industries. We've ratcheted the bar for growth as well. So as we look at our core businesses, auto, farm, Tech Mahindra, and Mahindra Finance, we see tremendous growth on the auto side. Farm is in a very good shape. Mahindra Finance has gone through a year of turnaround. We still have another year to go, but it's on a very good track. And Tech Mahindra has had some good wins and really getting poised for a greater turnaround under Mohit Joshi coming in as a new leader. So we've got our 4 core businesses in excellent shape. Our growth gems were started with a target of getting to $1 billion of market cap in 3 to 5 years. We saw that many are getting close to that target, so we took the bar up a notch higher, and we said that's not enough. Now we need to grow 5x in the next 5 to 7 years to remain a growth gem. And many of our growth gems have taken up that challenge. 2 of them have got external funding, and external investors have accepted the plans that the business has as well. So today I would just say that our teams have done a fantastic job, very proud of what they've done so far.
Well, you know, that's a very comprehensive overview of where things currently stand for the group. But let me pick up, since you spoke about funding, let me address a clarification. There is a lot of speculation and rumor around the fact that you're out there in the market looking for more funding as far as the EV business is concerned. I know you've just put out a disclosure to the exchange saying that there is nothing imminent or on the anvil at this point in time. But what should we understand that to mean? Are you actively looking at raising more money for the EV business at this point in time, or the 10,000 crore rupee capex plan that you have, is that already in place?
So I'm glad you asked that, Shereen, because there continues to be lots of rumors.
Practically every week.
Right? And, you know, 3 weeks ago or so, there was an article saying that we are not looking for funding, etc. So we have never actively looked for funding in our EV business. Even when BII came in, we had discussions with them at that point on a variety of things across the group. And they were very interested in EV. And we said that we have enough capital. We are generating enough funds in our auto business. So we really don't need it right now. But at the same time, as they felt it was important and we felt that they could help us grow the business well, we said, let's develop something. We didn't have a business plan at that point either. And they kindly offered to develop the business plan jointly, which we did. And we went ahead with that funding round. We have not appointed bankers at that time, nor now. So we have not been actively looking for investment. We have had a number of investors reach out to us. And with a select set of marquee investors, we continue discussions. And if someone is very keen and we find the right mix and we feel that they can add value to us, then we will go ahead with it. So that's where we are right now. We are not keen to dilute a lot. So
how much do you believe that you would like to dilute, since you said that you are in conversation with several marquee investors at this point in time, though nothing close to closure? Or is that me putting words in your mouth?
So let me just say at this point that BII has come in with a 2.5% to 3% stake. And we may look at another 2.5% to 3% stake at some point in time. Now, whether that happens in the next month, whether that happens in the next year, is something I don't know at this point in time.
The probability of it happening in the next month versus the next year, what are the odds on that?
Well, I think different people may put different probabilities on it.
I'm asking you,
I'll just leave it,
since you're the team lead.
So I'll leave it at that at this point in time, because these are always uncertain things. So I think a lot depends on both the investors and us.
But the likelihood of BII coming on board as a second round, or are you likely to bring in more along with BII?
I think BII has already put in their investment, and that investment is in tranches. So we will see that investment coming in tranches. So there may have been some confusion in the market saying that the tranches may mean they're putting in more funding, but that's been announced, that's public already. So the discussions we have right now are a set of marquee investors in addition to BII.
Okay, in addition to BII, and no timeline yet on when those conversations are likely to close.
That's great.
Okay, so let me move away from the EV and the auto business, because that is the business that the market understands, and that really has been the core business as far as the group is concerned. Let's address the other two businesses that you spoke of and gave us a quick snapshot on, and I'll start by talking to you about Tech Mahindra. I know that this is a business you're very bullish about. You believe that there is significant headroom for growth, but there's also significant headroom or a distance between where Tech Mahindra finds itself and where the peers versus Tech Mahindra are, both in terms of growth as well as margins. How do you change that?
So first, I'm glad you're looking at things beyond the group, because we've often been looked at as an auto company. But as we look at our 10,000 crores of profit last year, 20% came from auto, 30% from farm, and 50% from services. So I go back to what I said earlier, which is we're really the India story. We play in a number of industries where India is very well positioned today. And coming to Tech Mahindra specifically, we are below on margins, and therein lies the opportunity. Similarly, Mahindra Finance had not performed as well as its peers had. And this is something that we had to first acknowledge. We had to find why that was the case and address it. And I think the team there has done a very nice job now addressing that. And we see a much stronger performance over the last year. And with the changes that are being put in place, we will see Mahindra Finance really lead the market. Similarly, in Tech Mahindra, we feel that there have been a lot of good wins in expanding beyond telecom, in having new accounts, large accounts come in. There needs to be a lot more work done on margins. And Mohit Joshi, as he comes in as a new CEO, working closely with CP as the outgoing CEO, will work together to address that. And we feel that we know today what needs to be done. It will take time. It's not going to be overnight. But I would give it a 2 to 3 year horizon for that to happen. Similarly, in terms of what we've done with Mahindra Finance.
Okay, so 2 to 3 year horizon, that's what you're factoring in as far as the turnaround plan is concerned for Tech Mahindra. You said you know what needs to be done. If you could break that up for me into key priorities, what do you believe needs to be addressed at this point in time, specifically for Tech Mahindra? Because the challenge is also going to be at this point in time, you want margins to go up, but also the question is, are you willing to invest in the business at this point in time, and what could that mean?
So first, Tech Mahindra is a cash-rich business and continues to generate a fair amount of cash. So investments may not be required. If we do make investments in terms of acquisitions, we would do so very, very carefully, because that's one lesson we've learned, both at the Mahindra Group as well as at Tech Mahindra in particular. What we need at this point is to, one, maintain the customer centricity we've had. Tech Mahindra is one of the most customer-centric companies in this industry. Second, continue to diversify beyond telecom. We've had some good wins in financial services, in insurance, in healthcare. Continue that as we go forward. Continue the large account wins as well. And have a very strong delivery setup that allows for increasing margins and narrowing the gap between where we are versus competitors. So these are the three sets of things that are required. It's not rocket science in that sense. The team has already been focused on it for some time. The first two, I think, have been achieved to some extent. And the delivery part and increasing margins is a third that needs to be
So what has been your message to Mohit Joshi? You've articulated very clearly what you would like to see being changed at Tech Mahindra. But what's the mandate to Mohit?
The mandate to Mohit is establish market leadership for Tech Mahindra. Is essentially addressing the questions you started with, which is we are today lower in margins versus our competitors, and we have opportunities to be able to increase that. So with that established leadership, beyond that, an important element that Tech Mahindra is really focused now is staying at the cutting edge of technology. And this is an area where we're seeing a much stronger synergy with the Mahindra Group on a number of things. There are a number of projects on generative AI we are running across the businesses. We've had metaverse put in place in 4 of our industries. And these are things that help Tech Mahindra stay ahead. Work with the Mahindra Group to create pilots. We have a 5G pilot going on at Chakan, as well as a few other things that are linked to it. And take them to other customers around the world, having shown proof of concept in specific industries. Now, this is something that we feel will position Tech Mahindra very well again versus its peers, and position it as a leader in its space.
Course correction, I'm talking about Mahindra Finance. You've also got leadership change on the anvil there. Raul Rebello will. Let's talk about the other business that you spoke of, where you had acknowledged to me when we last.
Each business will look to the businesses which include Excello, which is really focusing on Java, EST bikes, and a couple more. So these are businesses that will look for external investors to come in as well. But the bar.
Let's talk about the other business that you spoke of, where you had acknowledged to me when we last spoke that there was need for correction, and you've been on that path of course correction. I'm talking about Mahindra Finance. You've also got leadership change on the anvil there. Raul Rebello will take over when Mr. Iyer retires in April of 24. How satisfied do you feel in terms of where the ratios stand today? And what's the aspiration now in terms of growing that business in terms of disbursals and size?
So very satisfied today in terms of where Mahindra Finance is. We had acknowledged that it had performed poorly versus its peers over the last few years. And we had outlined the set of actions required. All of those actions have been taken. And Mahindra Finance is on a very strong trajectory right now, as seen from its results. Raul came in as a Chief Operating Officer. We've elevated him to the CEO, so he's been a big part of this turnaround already. And therefore, it's not someone new coming in to be able to set it up. He's a fantastic leader. We had a very extensive search, and the board felt that Raul was best positioned despite a lot of very strong candidates across the industry, many from banking. And we've got a very strong team in place now. There's a huge focus on technology and data. There's a tremendous focus on asset quality and ensuring that we maintain a very strong asset quality. And the results today bear that. We've had GNPAs in the 8 to 9% range in the past, went up to 16%. Today they're in the 4 to 5% range. And it's not just where they are today, it's the actions taken to ensure they don't go high again in the future at any point when there's an economic shock. So these are things that are really enabling Mahindra Finance to start showing the strength it has, because the rural and semi-urban franchise that Mahindra Finance has is better than anyone else that we've seen around. And that's something that has been, in a sense, hidden by some of the challenges in asset quality we've seen in the past. More the volatility, not the losses, because the losses never came. It was just volatile in terms of provisions. But having taken that volatility out, I think it will help Mahindra Finance really be able to show the strength of its franchise.
You know, one of the aspects linked to the volatility that you spoke of and the fact that you've been able to do away with that is the digitization process. Where are you at this point in time in terms of digitization as far as Mahindra Finance is concerned?
I'd say halfway in our journey. It is a very significant, almost a complete revamp of the business. All the core systems are being changed. The processes are being changed. We've got a separate team focused on the consumer focus and making it as easy for the consumer as we can. So all of those things, and beyond technology, data is a big part of it as well. So we're looking at analytics playing a huge role in terms of how we source, in terms of how we collect, and essentially making it a much stronger business.
Speaking of strength as far as the business is concerned and future opportunities as well, what role do you see in partnership or collaboration with fintechs, if any, at this point in time for Mahindra Finance?
We have been working with a lot of fintechs to understand technologies. We also have been working with some of the established banks, and we've got with Bank of Baroda, we've got a co-lending agreement as well. We're working on the same with SBI, and that's something that will help Mahindra Finance be stronger. So it's working with the large banks, it's working with the fintechs, it's bringing in technology, it's bringing in talent that will really help transform the business. And a lot of these actions have been taken already.
You know, the NBFC space is also a fairly competitive space at this point in time, and there have been regulatory changes that have been brought in by the regulator there as well. How do you evaluate the landscape at this point in time, given the competition, and where do you believe you will need to do more to be able to take on the competitors?
So I think we are very well positioned because of the model Mahindra Finance has. That strength, as I mentioned earlier, we haven't seen anywhere else. Regulations are welcome for us because we are a very well-governed company. And for us, it's important to ensure that the consumer is protected. And RBI basically is very focused on consumer protection. That's what we want as well. So from that standpoint, that doesn't faze us. In fact, it's better. It improves the industry overall, and in many ways, it plays to our strengths.
Okay, that's as far as Mahindra Finance is concerned. But let me now address the issue of auto, because as you said, that the group has been known for its auto business. Demand has been strong, continues to look good at this point in time. You know, the expectation was that this was going to be a challenging monsoon. That fear seems to have ebbed. In fact, now we're talking about flooding and heavy rains across large parts of North India at this point in time. What does the order book look like, both on the tractor side as well as on the vehicle side?
So let me start with SUVs first. The order book continues to be extremely strong. And we continue to see over 9,500 bookings for the XUV700, for the Thar, 14 to 16,000 bookings per month for the Scorpio. And we've increased capacity. We've talked earlier about reaching 39,000, which we have. We will get to 49,000 by the end of this fiscal year. That will help us start meeting deliveries. That's the one thing we are very anxious about, is delivering cars to consumers in a timely way, which we have not been able to do so far because of the demand. So the demand continues to be just extremely strong. I think it's more a testament of the products that our team has developed.
But on the supply chain side, because you did face challenges there, have those been ironed out now? Is that a thing of the past?
Not completely. We still see about a 10 to 15% impact on production. So our production last month was roughly about 33,000 versus a 39,000 capacity. In the next couple of months, we hope to be able to bridge that completely and get to full capacity. So that has been a challenge. But as that eases out, we'll be able to produce more to be able to deliver to consumers. But the key here is the quality of the vehicles is a quantum jump over where it has been before. And therein lies a global opportunity for us as well. So as we do very well in India versus all the players in India, we are looking at taking Indian-made products globally and winning in the global market.
You know, you preempted my question, because I wanted to pick up on what you said, that Mahindra is really a reflection of the India story. And the India story at this point in time is also a story that wants to be much more integrated with the world. What is the global aspiration, not just for auto, but for the group?
We make the best products across all global players today, in auto in particular, in tractors, across many of our other industries. So we really want to be the India story that takes India global. It's not just for India, it's India for the world.
But, you know, courtesy Tech Mahindra, there is that international exposure through the auto and the farm segment as well. But what could the international business contribute to Mahindra over the next 5 years? And which businesses do you believe are poised, outside of the ones that already have international exposure, which businesses do you believe are poised to go international?
I'd say at this point, Tech Mahindra is there, of course. Auto and farm are going to be the two ones that we take global. The other businesses have a lot of room to run in India. We will do some things global there, but our approach still is have a very sharp focus. And that has helped us in what we've done so far. Win in certain markets, don't try and go out and do everything for everyone at one point in time.
So where do you believe, in your words, you have the right to win in international markets outside of auto and Tech Mahindra? In the growth gems, are some of those spaces that you're also looking at, you know, from an international point of view?
Not at this time, but that's something we will once they achieve their objectives in India. So our logistics business does have some things internationally right now, but we are still keeping that very small and very focused. Our solar business has gone international in the past. We pulled back a little because we feel there's a huge opportunity in India that we need to address. Our last mile mobility or electric three-wheeler business will have lots of opportunities internationally, and that's something we will be looking at more aggressively. So for each business, we're looking at it based on where we see the business poised to take advantage of opportunities in India, how well are they doing in India first, and then once we can win in India in a large way, then we will go global in a phased manner.
Okay. You talked about the growth gem, so let's address that issue because you said at the start of the program that the aspiration has moved higher. The first target was $1 billion in valuation, and now you've decided to set an even higher target for these businesses that you've identified. What gives you the confidence, and where do you believe you find yourself in each of these businesses today?
So let me take examples here. Our solar business has 1.6 gigawatt developed. We plan to go from 1.6, which we developed in the last 12 years, to 7 gigawatt in the next 5 years. We have Ontario Teachers' Pension Plan come in as a partner. They've underwritten our plan as well, invested in the business. And we are well on track to be able to do that. We've had a couple of wins recently as well. And at this point, we actually feel we are ahead of plan to be able to get to 5x in 5 years. Our electric three-wheeler business has a plan to get to 5x in 2 years. They've actually been more aggressive than the target we've laid out for them. And there we have IFC coming in as a partner. Again, they've underwritten that business plan. So these are live examples of businesses that have helped us set the bar higher for others. Now we're looking at life spaces, holidays, logistics, as meeting that same bar. And we're working with the businesses to be able to set up a 5x plan and be able to then achieve it.
And similar to the other two businesses where you do have marquee investors on board, are you looking at investors across each of these businesses?
So these three are public, and there may be investors that come in, but that's not something that we would drive. And we have another set of businesses which include Excello, which is really focusing on decarbonizing the auto industry, which include CLPL, which is Java EST bikes, and a couple more. So these are businesses that will look for external investors to come in as well. But the bar continues to be high for them, which is we do want to grow 5x in the next 5 to 7 years.
Let's talk about the electric mobility space for a bit, because we've seen a regulatory change coming in as far as the FAME policy is concerned. But on the three-wheeler, on the record, from all of us here on the team, for now, goodbye. Many thanks for watching. Do stay tuned. The news continues on CNBC TV 18. You know, let's talk about the electric mobility space for a bit, because we've seen a regulatory change coming in as far as the FAME policy is concerned. But on the three-wheeler side, actually, the offtake has been lower, and which is why some of that allocated money has been moved over to the two-wheeler side. So a life without subsidies, you know, how do you read that landscape?
So subsidies, let's talk about first why a subsidy is essential. Because in general, we shouldn't be subsidizing automobiles as a philosophy overall. The transition to electric requires subsidies to be able to deliver vehicles to consumers at more or less the same pricing as we can do for ICE vehicles. That's when consumers are going to adopt electric vehicles. It's about adoption of the technology. And that's going to be required for a certain time frame till that technology becomes mainstream, after which you don't require it. So that's the essential part, and that will be required for PLI schemes, as is the case right now. Our three-wheeler business has gotten the PLI approved. FAME is going to be essential for that as well, because consumers want electric. And if we can facilitate that to happen with support from subsidies from the government, that's going to put us in a much better place. That's going to put the industry in a much better place, but the economy in a much better place as well, with less dependence on oil, with a much cleaner environment. So that's really the benefit of the subsidies.
But, you know, both, as you said, that you've managed to get the PLI scheme going as well, and of course the FAME subsidies are available, though, as I pointed out, the offtake for three-wheelers has been lower. What's the plan as far as the PLI is concerned in terms of being able to meet the production targets that you've committed to?
We are on track for that. As I said, our three-wheeler business is really looking at growing 5x in the next 2 years. So we have a very aggressive plan that's put in place. And today we've got 65 to 70% market share as well. So we are in a good position. We've taken leadership space here. And beyond three-wheelers, we see a lot more potential on the four-wheeler side as we come out with our 5 born electric SUVs next year.
Yes, and again, you've preempted my question on the 5 born electric SUVs. Confident of being able to meet that target? Because it's a fairly ambitious plan to put 5 out in the market.
It is an ambitious plan. We put that plan out a little more than a year ago.
Yeah.
And today we are slightly ahead of plan. So we hope to stay that way.
Slightly ahead of plan, meaning? Could you advance things, or?
As I said, at this point, slightly ahead of plan, which is probably a month or two. But this is an area where we will always have some challenges that come in. We've had multiple challenges in the last year as well. And I think, again, the team has done a very good job of staying on plan for this. Right now, we're slightly ahead. So if we stay at this level, then yes, we will advance it a little bit. But there's a lot to do.
You know, there's plenty of action in the auto space, more so in the two-wheeler space. You talked about Yazdi and Java. We've just seen Harley and Hero announce their partnership and put a product in the market. Triumph and Bajaj putting out their product in the market. And at some point, I would imagine TVS and BMW will be doing more as well. You know, what is the role that you hope to play in that space, if any at all, given the fact that you do have marquee brands sitting in the stable?
So we love competition, right? We've been written off many times. Right? In 2002, we were written off saying Mahindra is not going to survive. You've got all these foreign brands coming in. Right? 5 years ago also, we were sort of written off saying you got Hyundai and Kia and others playing a big role in the market. We've come back strong every time. Right? In the SUV market, we are #1 now from a revenue market share standpoint. In the LCV market, we're #1 by a huge margin. In the tractor business, we're #1 in a huge margin. Electric three-wheelers, we're #1, again with a huge margin. So we love competition. And it may take us some time, sometimes, to really get in and develop the right set of products that are required for competition. But I feel that our business will do that.
Is that a focus area for you?
That is a focus area for us right now, because we feel that these are two very good brands. And we feel that with the strengths we have and with the partners we have, this is in partnership, we feel that we should be able to put this business on a very good track.
And by when? What is the timeline that you're working with, at least as far as this two-wheeler plan is concerned?
For all our growth gems, the timeline is that we want to grow 5x in the next 5 to 7 years. So that is the umbrella timeline. Each business will have certain challenges that it has to face, and that's something we will tackle as we go.
You know, you spoke about individual businesses and the challenges that you see for some specific businesses, but at a group level at this point in time, you know, things are looking good, but what are you most concerned about? What would be the key risks or the key worries on your dashboard today?
I think what we're most concerned about is actually risks that we don't know about, either from a geopolitical standpoint or from an economic standpoint. We've seen many of them come through in the last 5 to 7 years. So our teams now are trying to gear up for what-if scenarios and have various optionality plans laid out. So that's really the challenge. In terms of business as usual, we are on top of what we need to do. And that's where our teams feel very good about where they are. We've been able to deliver. We've had tremendous results, not just last year, but multiple years in a row right now. ROE is at 19.9%.
The target was 18, so you're ahead of that.
The target was 18, and we had said 18 in 5 years. We got there in 18 months. So we're ahead of that.
But so are you going to upscale the target now? Is 18 going to move higher, or are you comfortable for now?
No, we're not upscaling it. We have had those conversations with our investors because what we're upscaling is growth. And our investors are happy with 18% return, but they want faster growth. So that's what we're going to do, and that's the reason why I'm not rounding off to 20 years yet, because we will be closer to 18, but we're really ramping up growth in a significant way.
You know, two of the things that you chose to focus on over the last few years, repair as well as recovery and rationalization. The repair done, you believe, but especially in terms of impairments, etc., is that now a thing of the past?
Yes, repair is done. We've exited close to 15 businesses. And we've had a separate category of what we call loss-making businesses. Collectively, they were 3,429 crores to be exact in terms of losses in F20. There are 26 crores of losses in the last year. And that last 26, we know exactly where it is. There are 2 businesses that is work in progress at this point, and that's something we will complete soon as well. So all the heavy work is done there. And that really gives us time to focus on growth now. So we've been very structured and methodical, if I may say so, in our approach, which is let's take a particular problem, tackle that, and whatever we do, let's do it well. So let's not spread ourselves too thin, and that's worked.
Well, clearly, it has worked at this point in time. So let me end then by asking you if growth is the key driver, the key priority at this point in time. By the end of this calendar year, are there any specific milestones that you have, or for this financial year, any specific milestones that you've set for yourself?
There are specific milestones for each business. And the first is actually making sure that the mindset for growth is there. That's something we've actually had to do a lot of work in the last couple of years, because it's not easy. If a business is growing 20% a year, generally would feel pretty good. And if we go in and say, 20% a year is not enough, we need you to start thinking of 5x growth, that is a very significant change in mindset. So that's step one. The second step is to look at, do we have the resources to make that happen? Do we have the talent? Do we have the bandwidth that's required for it? Capital, yes, we have, but what is capital that's required? Do we get the returns from it? So it's really making sure that we have all the resources. And then the third is a strong implementation plan that we will then track regularly. So each business is at different stages in evolution there. And the good part is that most have now got that growth mindset and have got most of the resources in place. So a lot is about implementation.
And largely organic growth is what you foresee, or do you believe that across each of your businesses, M&A is going to be a crucial growth driver?
It will be a combination of both, but what I will say is that the bar for M&A is extremely high, because we have to be able to deliver what we would expect when we go and make an acquisition. And therefore, the conversations always are about, it's exciting to go and see acquisitions, but let's talk about the conversations every month after the acquisition. On what was our target, have we delivered or not. And as we do more of that, I think what we will see is some acquisitions, not a whole lot, but acquisitions that will actually deliver what we expect them to when we buy them.
Well, Anish, it's been an absolute pleasure. Thank you very much for sizing things up for us in terms of where things stand, but more importantly, laying out a roadmap of where you believe the group is likely to be, including the milestones that we've set for each of your core businesses as well as the growth gems. It's always a pleasure. We wish you the very best of luck. Thank you so much for having us here today.
Thank you, Shereen. Pleasure being with you today.
Well, with that, it is time for us to wrap up this edition of On the Record. From all of us here on the team, for now, goodbye. Many thanks for watching. Do stay tuned. The news continues on CNBC TV 18.